Welcome to Investing by the Books podcast by Redeye. I'm Eddie Palmgren, your host. And with me in the studio, I have Niklas Sävås. Today, we are excited to get the first podcast episode going. And today we will talk with Sean Iddings, who wrote 2 books on intelligent fanatics together with Ian Castle. From the framework of Redeye quality rating, what will the episode focus on today, Niklas?
So the quality rating covers business, people, and financials. And this one is about people, the management and the owners.
Yeah, and we can really hear that from the subtitle of the first book, How Great Leaders Build Sustainable Companies. And the second title is Standing on the Shoulders of Giants, also a great concept. What are your thoughts on the books?
I mean, first of all, the books, they're really easy to read. Each chapter covers one of the fanatics, and it covers their background, why they chose to start a business or join the business, and I mean, what they did, and also, of course, the value creation during their terms, which is incredible in all cases.
Yeah, that's some insane returns over there. And the second book follows the same pattern with those case studies of intelligent fanatics. What I liked with that one was that they also contrast the leaders and their organizations against some competitors, and they also bring up mistakes and flaws among the intelligent fanatics to give some more nuances and to show that they are also human. Do you have some other key takeaways or stories?
I mean, one key takeaway for me, and I think will be for many that chose to read the book, is that I mean, many of the fanatics really focused on industries that are really competitive, and they still manage to carve out an edge, which is quite rare. And I think one of the first filter that many investors have is business quality and the industry. And if you look at a cyclical industry as steel, for example, where Ken Iverson, which is one of the fanatics, operated in, you would probably just put it in the too hard pile immediately, filter it away.
Yeah, and some might say that, okay, there's always a successful example somewhere. These are just the survivorship bias that these businesses thrived. But why did they succeed for decades and decades and kept their dominance? There must be something to that concept that kept them going. And one thing is really about learning not only from failure, but focus on the success part. So that is something we will do today in the first episode of Investing by the Books podcast. We will focus on intelligent fanatic model, the blueprint for building dominant, sustainable businesses. And here comes the interview with Sean Iddings.
Welcome, Sean. We're so happy to have you on the podcast. We actually interviewed you 2 times before, in 2016 and 2017, for Investing by the Books.
Uh-huh.
And it was right after you released your books, where we covered, of course, the content and why you decided to write the books. What has happened since?
A lot. Well, first of all, thanks you guys for having me on the podcast. But so since 2016, I guess a lot has happened with me. Ian Castle and we developed another book after the first one, and actually another one after that, based on like Indian intelligent fanatics. We built like a community, and over time just kind of decided that that wasn't really our best usage of our time, and providing value to other individuals. And so for me, I really wanted to take the intelligent fanatic principles and take all that study time and actually apply it in real life. And so instead of applying it as an investor looking for the next greatest business, I actually tried to take that information and put it into an entrepreneurial endeavor. And so it's probably about 2019, I was getting a little desperate in terms of, trying to seek out cash flow avenues. And I was just looking around for opportunities, and my wife had recently become a real estate agent in our area. And so I kind of have like a technical, background. I've always been really interested in like IT and tech. ever since I was like 2. I can remember like sleeping on a keyboard, playing games. But so my wife, is operating or was operating in a really competitive real estate market. So I said, okay, well, I'm going to try to give her an edge. How can I give that to her? So I saw that nobody in the area was providing really a business oriented real estate photography kind of service. So doing like, high quality real estate photos, 3D tours, video, all that kind of stuff. There was really no one-stop shop for that kind of service. All the real estate agents were, just pointing and clicking with their telephone, uh, phone, video or photos. And so I learned as much as I could about taking photography. I had actually like no experience other than having a cell phone in my pocket. So I went to YouTube, learned about drone photography, and getting a drone pilot's license. I learned as much as I could about it. And the funny thing is, studying intelligent fanatics, a lot of them came from different spheres or fields before they entered the one field that they really dominated. So for instance, if you look at Herb Kelleher of Southwest Airlines, he was a lawyer before he really co-founded and built Southwest Airlines. Saul Price was a lawyer who built FedMart, which turned into Price Club, which was pretty much the forerunner of Costco. There was, I could just, continue going on and on and on with more examples. But for somebody to really come into a field and think differently, having that non-experience is actually very helpful. So for me, I saw my non-experience of photography as actually a benefit. And also I was a musician for many years, and I understand the artistic aspect of any kind of art, whether it be music, art, or photography. A lot of those individuals, they like to do everything themselves. They are very, how can I say, non-business oriented. And so I knowing that as a musician, I knew that any kind of photographer in my area, if they ever did want to compete against me eventually, they wouldn't want to compete with me because they're all non-business oriented. So I thought that was like a perfect place to enter. And then, so I helped out my wife. She decided that it wasn't really for her, the real estate thing. But over, a short period of time, I was able to gather, the biggest realtor in our area. And then, via word of mouth, I've built up a huge clientele in my market. And, it's continually just grow. And, I'm, again, just trying to utilize everything that I've learned. And it's fun just to see how all of that effort and painstaking study, in something can actually be utilized in real life. And it's, preparing that, sharpening that chisel for a couple years, and then eventually just going out and just tapping a tree and just seeing it fall down. It's all that preparation does definitely work out. So that's pretty much my trajectory since I last, chatted with you guys. So quite a different, journey. You'd think I would still be investing, full time, all that kind of stuff. But no, it's just interesting to keep my eyes open and then being able to utilize some of the things that I've learned.
Yeah, it's definitely interesting to see which paths you take in life and how things just come upon you. Coming back to a bit about how, like, you started the intelligentfanatics.com website, and you had the membership network and everything. And
Yep.
now we can follow this journey with your new business experience on another site, the woodshed.com. Can you
Yep.
tell us a little bit about that?
So Yep, I can definitely chat about that. And so intelligentfanatics.com, we had a bunch of content, all the stuff that we were learning, and just decided that, just to, really cut it off because of the maintenance and all that type of stuff. But I've just decided to kind of repopulate some of that content onto my own blog, and it's called The Woodshedd. And the reason why I call it The Woodshed is because as a jazz musician, that's what I was pretty much, for the majority of my life before getting into investing in business. Uh, One of the sayings of any musician, especially a jazz musician, is if you want to become a better player, you have to go to the woodshed. And that just technically means somebody just goes in isolation and really takes their instrument and learns it, studies as much as they can and really breaks down the essence of music and learns as much as they can from other great players, and just technically works on what, quote unquote, their chops, that being their technique. And so for me, I thought it was a perfect name for a couple reasons, because uh, number one, I'm still, I think, in the woodshedding phase of my, business and investing career. And I think the whole concept of the Intelligent Fanatics project for myself was to woodshed, trying to learn all the techniques from the great business and investing masters of the past. Uh, and, just trying to prepare myself for any kind of opportunity that might come in the future. And of course, as I just told you, I've prepared myself for my current business opportunity, and also prepared me to hold on to one of my investments that we'll probably chat about in a little bit. And secondly, I thought the Woodshed was a great name for my blog because I recently purchased an office that is actually a shed made out of wood, and there's tons of wood interior in it. Uh, that's on my property, and that's my physical woodshed where I come in to isolate myself when I'm not doing my real estate photography business and doing shoots, and learning, studying, and really trying to continually self-improve in life and business, investing, and such.
I find it's great that you can learn so much from these fanatics, not only for investments, but also, as you say, for the business itself.
Yep.
And I wanted to touch a bit more on the actual study of the fanatics. In the first book, you have a table where you summarize the key traits that they have in common. And I think it's a great high level description of how to find a great leader. But at the same time, it's much more nuanced than only a yes no question. Yeah. Have you further researched strengthened the view that those are the key traits? And considering that there are nuance to it, have you added something that you want to discuss?
Well, I think it's for book form and trying to share information and understanding with other people. First, it's really difficult to share understanding with another individual, just because I can say words, and some things might stick and some things might not stick for the individual because they have totally different experience. They have different biases. They have just a totally different worldview, and so it's for a book. It's good to kind of simplify from the top. Some characteristics and traits, but I think over time, especially with my music background, it's to build up a pattern recognition, a well-formed pattern recognition. It's very, very hard to kind of elucidate to somebody else in word form and table form or what have you. And I think there's so much I've learned since, actually writing the book in, say, like 2015 and the next one, and then so forth. there's just so much of a mosaic, I would say, that there's so many pieces that I've been able to take from, everybody I've pretty much read about and learned, and to try to form that picture, that mosaic in my mind, and it's in what I can visually see in my head is like a beautiful, think of it like a mosaic painting of what a great business is. And for me to, say in words, it's very difficult. And I think each one of those tiny detailed pieces are all very important for the overall picture. And it's comes down to, so the one reason that I've kind of shied away and moved away from like just specifically intelligent fanatics is because that is looking at the leader as the end all be all, but that leader is extremely important, but it's what they build that I've really come to understand is so much, an important part of a great business. And so the great leader, sets the tone of the business, but it's the people they bring in and it's the culture that they're able to form that is so important, and how they're able to execute compared to other people in the industry, and what type of value that they're able to provide to the customers, and and so on. And that's really the value generation that they're able to create is based on what the whole team is able to provide in value. And so that's why like looking at the leader is extremely important, because if I want to become a leader, I have to be able to follow some of the things that they did correctly. And I think that the most important thing is that team, that whole kind of encompassing picture of a business that they're able to create. And so Tony Hsieh, who unfortunately passed away not too long ago, who was the founder and CEO of Zappos, he thought of like a leader as more of a person who architects a greenhouse that sets the conditions to which the plants thrive. And I think that is a great metaphor that a leader, such as myself now, that's one thing that I'm trying to start to really understand and actually put into practice, because it's that team effort that if you can get the whole team working on the same page and going all in together, they're going to, dominate, no matter who comes by. And so you might have, some other competitor who has, is so talented, but they suck playing with, their other team members. Their ceiling of ability is going to be totally capped, and so much less than a team of maybe moderate players all working together in unison. They not only will be able to provide better value in the short term, over time, a much longer period of time, they'll be able to stick together, and it's a much more durable competitive advantage to have a team that's totally all in, who might not be all the best themselves, but as the team, they really leverage all of their talents together and create, some insane, phenomenal value.
We're really getting into the culture part, which is one of the most important parts of a business, as you say. If we look at the ownership and the difference and the relationship between culture and ownership, and how you define this quality culture, could you elaborate a little bit on that?
So one thing a lot of investors, and myself, when I was really putting a lot of time into investing, they we usually would look at a company who has a founder, founder led, who has a lot of their equity or net worth tied to the business, and if they own 50%, if they have control, even better, right? That's one of the things that investors like to look for. Somebody with a lot of their own equity into a business, because it's better for a cook to eat more of their own cooking. So I've over time have come to realize that that's not even really a good indicator, because a lot of micro cap small companies, which was where I was investing and continue to invest, a lot of companies have those. And if I look back even further, a lot of small businesses in America, and I'm sure in where you guys are located and anywhere in Europe and wherever in the world, small business owners, they own 100% of their business, and that doesn't really tell anybody anything. That just tells you that they own a business. But it's not really conducive to saying they're going to be the next greatest business in the world. And so I think the ownership kind of part of a leader, it's good to have somebody who has, a ton of their net worth tied to their business. But I think there's so much more, and kind of going back against that mosaic idea. Okay, that's one little teeny tiny blip on that painting, but what's the rest of that painting look like? What other details? Now, the other details would be, just what type of personality the individual is. Are they an actual, like bona fide leader type? So are they somebody who really likes to be around people and really trying to motivate and inspire them? And how do they do it? Are they going around trying to cut other people down, or are they trying to build other people up? And I think if you can get out there and speak with management, you'll be able to, first time meeting somebody, you might be able to get a little bit of an idea of, who they might be, but it's over time you're able to build that trust. But I think one of the best things that has helped me, and I think it's more of a universal, I wouldn't say perfect, kind of idea or thing to go by, but I think it's one of the things that human beings are attuned to as social beings, is trying to seek out people similar to them. And so I think that the more you embody the great leader yourself, the more you're a trustworthy individual, the more that you embody integrity, the more that you embody any kind of characteristic that you're looking for, and you just literally go out and look for people like you. And I think that's just a natural inclination of human individuals, is to literally seek people that with similar likes, interests, and who have commonalities. And so I've given some different examples, that being, say, like Warren Buffett, and a lot of people say, well, he's got a great ability to sniff out people who have high integrity, who have ability to lead people in a great decentralized manner. Well, if you look at Warren Buffett himself, he embodies it, and he just literally goes out there and finds people like him. So an example would be like a G Chain, who runs like the insurance operation, all that type of stuff, Berkshire Hathaway. So Warren finds a G when he's younger, less molded, but has potential. And I think if you look at Buffett, he's just literally finding somebody like himself, and then each night he's able to, chat with him on the phone, and then feed him all this information to make him a better leader. And then I think it's just literally embody what you want to be. And so for my example, I try to, literally become an intelligent fanatic myself by learning about all these great business leaders of the past. And I think I try to embody all of their principles of integrity, of, delivering more than you say you will. And, just providing as much value as I can to myself, my family, and anybody who comes into contact with me. And I literally just look for somebody like me, and that's been extremely helpful in terms of, finding business operators early on in their life, and then just holding on, and then also just becoming that leader myself.
So we touched upon it in the beginning, and we mentioned Expel. So maybe you can just discuss the experience you had with Expel and meeting management there, and I mean how you gained more confidence in the stock.
So I first came across the company, and disclosure, I still own shares, not as much as I used to, but I can talk about that later. But anyway, so I initially invested in it 2014. Of course, I became a part of Microcap Club, led by Ian Castle and Mike Schellinger, and there is where I actually, saw the company. It was posted on there in 2013 sometime by Paul Andriola, who's a great investor himself, and it was posted at like 30 cents a share, so many moons ago. And so there was a lot of chatter on Microcap Club that this is a great company. There's a lot of individuals on the forum that were doing some great due diligence. So they're getting out there, meeting with Expel installers, like suppliers, and there's people I'm sure who had a bunch of money in it back then and had made tons of money because Expel in 2011, 10. Share price was 1, 2, 3, 4, 5 cents, and by the time it's 30 cents, they've been doing pretty well. And so it was pretty popular on Microcap Club. And I initially saw Expel, and I'm like, what the heck is it? This is a car condom company. You put sticky plastic on cars, and it's like, what's the value in that? And I couldn't understand it. But over time, I thought about it and I looked at it and I'm like, there's a lot of smart people looking at this company, who's still, it's still tiny. It was trading back then at like a $30 million market cap. And it was doing revenues back in 2014 of roughly, $28 million yearly revenue. And so I was just really intrigued. And so I tried to dig in a little bit more. And I saw that the company didn't really have like an option plan. And so it's literally not even the CEO, Ryan Page. So that really like hit a tone with me. And I had recently been studying Walmart in its infancy, Sam Walton. So I was just really intrigued to how the incentives were set up there and how Walmart managers of new stores were incentivized. And I just, started thinking about it. So I'm like, okay, these guys are growing pretty well. And it seems like the penetration rate for paint protection film, which was the main driver back then for automobiles, there is a market for, low penetration, 2 to 3% worldwide of new cars sold. There could be something here. And so I just dug into it a little bit more, called installers, leveraged a lot of my network, which being like Microcap Club members. And so I initially bought in like July or something like that. And then over time, I think, so that's about 2014, I started to really dig into, studying other great leaders. And, at that time I hadn't started the Intelligent Fanatics project yet, but it was definitely something I've already been working on, just studying great businesses. And so over time, I think I first met Ryan Pate, the CEO, 2000, I think it was 15. I can't remember. I'm pretty sure because there was or 2014, there was a Microcap Club conference in Detroit, Michigan. And so I met, all the other CEOs and met a lot of the interesting characters in the microcap land. And just like I've always been a very shy person, so it was me getting out of my comfort zone, and which was good. But I've always been turned off by slimy people, and slimy, I mean they're very salesy and they're very just make me uncomfortable. You can tell like those type of people generally they're great at talking, they're great at, trying to get you to do something, but I generally see through it. And again, I try to look for people just like me. And I think, hopefully I'm a humble, have high integrity and all that kind of stuff. So I'm looking for that kind of thing, either actually mentally or just subconsciously. And so I saw a bunch of the CEOs there, and it's just like, oh God, it's a bunch of slime balls here. And, of course, I was looking forward to meeting Ryan Pape, because I'm like, okay, this guy's, the cheese. He's a cool guy. Everybody wants to meet him. And, company's been doing well and all that type of stuff. And he just seemed like a straight shooter. He wasn't, even back then, like gonna tell you, the best thing or tell you what you want to hear. He's just gonna tell you what the facts are and just move on. And that really resonated with me. And, just the vision, like I could already start seeing, form, some of the vision that these guys had in terms of what they're trying to build, what type of team that they're trying to build. And so, of course, over this time, I'm still studying and trying to really internalize the great leader. But still, I invested quite a bit cash, not cash, but just position of my portfolio and other people's portfolios that I was managing, like 10% or something. Because I thought I had some gumption that this thing's going to be, an interesting company. I never knew it was going to be as good as it has. But so met them there. I still, like to this day, have never been to the Expel headquarters, and I've been to a couple of different companies that I've invested in, but I can even kind of tell from afar, just what type of business that's being created and what type of teams created. Because, of course, in calls with some of the employees at like Expel, like over, in the next couple months after having that first meeting with, management of Expel, just trying to figure out exactly what their incentive structure was in terms of sales, and how did that compare with other competitors. And I just found that the way that they incentivize salespeople, it's very low base pay and it's lots of upside as long as you execute. And of course, that what does that sound like? Well, to me, I'd been reading about like Nucor Steel with Ken Iverson, and what did Ken Iverson do? He set up the incentive structure where the employees would have a low base pay and a lot of upside as long as they're executing. And not only that, in terms of financial incentives, these guys are incentivized to think like owners. And as I learned more about like Expel's like installers, so owned installers, they'd have like an incentive structure that was making the installers think like an owner. That being, like they have their own kind of control over their little P&L of, installing film and taking inventory of the film. And then that was, okay, it's like, wow, okay. So these guys have really thought out one of the most powerful levers in business, just incentivizing everybody to think like an owner. So going back to the question before of like, okay, well, looking at leader with who's incentivized to think like an owner, well, that's fine and dandy. Most owners or leaders, they're hopefully going to think like an owner. But now if you can get everybody within the organization to think like an owner, holy shit, you can get some pretty cool results. Because not only do you have just a leader who thinks like an owner, you have everybody who's working not only against each other, because, whatever incentive to, make me the best. It's how can we all think like an owner and work as a team to get better results together. And you only go as far as you can alone, but you go way farther together. So that was another kind of thing that I learned about that really helped build my conviction. Another time that I met management, well, it's, of course, there was like the lawsuit that happened. And of course, I was, again, fortunate to be involved in the microcap club where there's individuals way smarter than me who know like patent law and that type of stuff that helped form a good idea of how this company could get through this potential problem. But then again, it's like I studied Southwest Airlines. Herb Kelleher was a lawyer. And like when Southwest began in 1970, 1971, whenever it was, they didn't fly for the first, 4 or 5 years because competitors like Braniff International Airlines, they were preventing Southwest from actually flying because they were saying, like this law, this regulation, like you guys can't fly. And so Herb Kelleher had to work his butt off to really get that company just literally off the ground and to start. And so I was familiar, there's great companies that can start from these really, rocky, trouble, litigious situations. Or I just remember hearing about like Henry Ford and like they were having legal issues at the beginning, and it's like they were able to overcome it. And so it's usually the great. So I'm starting to understand. Okay, well these great companies, they'll have some rocky patches in the beginning, but it's usually their ability, their great culture and great leadership that's able to navigate, whatever conflict that arises, as long as it's not like the biggest conflict ever. But they're usually, it's in those conflicts they see opportunity to demonstrate to their people that they're, the whole team is very valuable. None of these conflicts can really stop them. They're just more probably motivating. And so, long story short, like I met Expel Management again, and I remember talking with Ryan, and he's like, well, I asked him like, what's kind of the company that you look to in terms of what you kind of want to build? He's like, Amazon. He's like, there's next day shipping, and it's that instant gratification that really gets, people wanting to get into Prime membership and all that type of stuff. So that's been huge for Amazon. And so the getting close to the customer concept for Ryan was huge. And I really saw that as, so Expel sells to installers. So it's not a B2C company, so business to consumer. It's a B2B. So they're selling a necessary product for an installer to install onto their customers' automobiles and now pretty much whatever. And so for a business to operate, of course, you need film or an installer business. So they need a precious resource to operate. And if they aren't able to get that supply quick and, in a pinch in some circumstances, that can be a huge boon, or not boon, but a bad thing for their business. And so just having that inventory and having that relationship, that closer to customer relationship, having a lot more inventory than they probably really need, and getting it closer to the customer really helps with that customer relationship. And, because if competitor, it takes them a week to get the supply to them, where Expel can get it to them in a day, boom, that's going to be a huge competitive advantage. So that was another thing that really helped me build conviction into the company.
All right. Can I break in with a question?
Yeah, of course.
Like when you started looking at the company and you started investing, and how much were you looking at the financials and the valuation? How were you thinking in terms of that? Because we at Red Eye, we usually say that financial is a lagging indicator of a company quality.
Yeah, exactly. So it's lagging, especially with the smaller companies that are, not quite at their growth inflection point. And Expel actually had, 5-6 years. Okay, let's see, 5 years or so, 4 or 5 years of growth that was pretty fantastic. Back then, it was trading at, multiples of revenue of one or at most two times revenues. So, and in terms of the net profit, that wasn't as high, and there was profit growth over that 5 year or so period. So you could see that there was some financial diligence. They're not just spending all their money that they come in, but they're actually pretty prudent in terms of growing the business. And in terms of the return on investment, or the ROIC, this is a company that's not only able to invest into new opportunities, but to do it in a very well manner. So if it's getting a ROIC of like over 20%, still growing at at that time like over 50% per year, and it's still growing pretty well. So those were some of the lagging indicators that was giving me a little confidence that this could, and of course it still had a long runway in terms of potential avenues to grow. But I didn't spend too much time on looking at the valuation. Like I said, it wasn't ridiculously expensive. It wasn't a SaaS business trading at 10 times revenues or anything like that. And it was trading, can't remember the exact number on profits, but it wasn't trading for any ridiculous PE. Maybe 40 or 50 times at at some point in 2015 when it was a little bit high. But I kind of gave like a little financial model back in 2014 when I initially did my write-up on Seeking Alpha, whereby I looked more at the potential size of the company and the potential financial metrics of what it could be in say 2021. And of course I was way off because it's 2021 now, and I can see like revenues I was probably higher, but in terms of like the profits I was halfway decent. Growth, the trajectory was pretty close. And then what I tried to do is just net present value that number, and then base whatever. I had a pretty high hurdle rate attached to it, so I think I had like 25. So if I wanted to get a 25% return on my whatever numbers that I put on, it was, I think it was like 6 or something like that, and it was trading back then at like 2. Okay, so I'm like, okay, well, I can be pretty wrong and still have a halfway decent outcome. And then over time, as things have progressed, I've just added to it because conviction has increased. And over time, so initial was I think like 175. Lowest I think I bought was a little under 1, and I think my overall, I think the highest I've paid like 20. So like my overall cost average is like 330 or something like that. So I put it quite a bit at the beginning, and like in 2017, 18, I put a huge chunk in. So that kind of gives you an idea of how I think valuation is definitely leading indicator, and especially it's not a great thing to look at when you're just putting a multiple on a small fastly growing company.
Yeah, but the stock has not been really, it's been skyrocketing, but it's not a straight line. You had major drawdowns during that time, as you showed on Woodshedd.
Yeah. So it's there was a time when it went from 3-ish all the way down to 66 cents. So we're talking at times it was down 80% from the high. So that did not feel good, and especially I was investing some friends' money. It's an individual who's kind of become a friend, much older than I am, and just trying to just talk to them, like during that period. It's difficult. It's very difficult, and they just look at you like, "Are you like the stupidest person in the world?" It's a very, and like my one friend that I put a huge chunk in, and it's like I'm trying to talk with him, and I can just tell it's like thinking like, you're stupid. Like why have you lost me this much? And I'm just like, okay, I haven't lost you the money, number one, because I haven't sold it. Number two, and I tried to make it as simple as possible. like this is just kind of a temporary, measure. Like big companies coming in, throwing a lawsuit that's pretty worthless. And I think this is, great team, still large runway. Just please have confidence in me. But I think just trying to convince somebody else to have confidence in something when you still just question yourself. And there were so many times I questioned myself.
Yeah, it's really challenging and so many biases are at play there.
Oh yeah.
Which would you say which are your most common biases when you're investing, and how do you deal with them, like practically? Can you give some examples there? Would be interesting.
Well, there's a lot of, I think of the whole reason why I try to prepare so much in terms of studying all these great businesses, investors, and all that kind of stuff, is so I can mute, or not like literally mute, but like turn down a lot of these biases, because I think the human mind has these biases, these shortcuts, because it's just an evolutionary way that should kind of work out. So, for instance, me being out in the jungle, and then I see like this huge, tiger in front of me, like evolutionary, like I should run from that situation. And that's just a good thing to do. But when you're faced with the financial version of that, you're out and Mr. Market is coming at you with a gun, and that would be, like you see your stock go down 80%. The evolutionary, you should run from that situation. You should sell and you should run. But I think with the more preparation that one does, the better the pattern recognition, the better you're just prepared to see, this situation as different than how your brain perceives it. Like I said, if you see Mr. Market coming at you with a gun, well, that's, how most people would see it. But having the right tools and thoughts and knowledge and vicarious experience, you might see that differently. And so while I instinctually felt like a dunce when I saw, anytime that I see a stock fall down, but when I have so much conviction in something, I still have to see it in a different form. And that would be, seeing more of an opportunity out of it than an actual, risk or horrible situation. So I think that is been one of the ways that I've been able to get around a lot of my biases in terms of investing, and like anchoring, just seeing that your stock's gone down a ridiculous amount, and just trying to find that equanimity. So just being able to see each situation as it is, instead of as what most people think it is. So most people think that roller coaster is horrible, and but it can be either horrible, or it can just be an exhilarating experience. It's just really how you perceive it, and I think that preparation goes a long way in helping one navigate that in a better, non-biased way.
And I guess also it helps if you're not managing money for others as you did. But do you think it would have been easier if you had only invested your own money?
That's a very good question. I still think I would have felt like a dunce. But I think when you're managing other people, it's more magnified.
Compounds.
Oh yeah, by a lot, and especially if it's people that I think some people who you might be close with could overlook some of it, because they might know what you're capable of based on their experience with you. And so I think I had that benefit. I think if you're managing other people's money who don't know you as well, I think that's what would be probably the hardest, because not only do they? You're faced with, can they trust me? They might not know me as well enough. Those people are generally gonna, get out at the worst times because they don't know you. They don't know what you're capable of. So yeah, I think it's much more difficult with other people's money. I'm glad, I'm glad that I didn't manage more than I did.
No, it's crazy when you hear those studies about, I mean, Peter Lynch with his stunning record, and then when you hear about the investors in the fund,
Right.
they didn't prosper as much, unfortunately.
Yeah, it comes down to conviction you have into whoever's running the show, whether it be somebody who's managing your money or conviction you have in the company that you're investing in. And so majority of people who don't have the preparation, who don't have the mindset, they're gonna generally not get the best results, even out of great opportunities. But I think the people who've put in all of that work, all of that woodshedding, they tend to get above average results out of even great situations, or they even might be able to turn lemons into lemonade. So even extracting quite a bit of value from bad situations. So yeah, that's what I think about that.
So again, big congratulations to that investment, and also that you showed that, I mean, how the theory could be put in practice.
Yeah, thanks. And I just think that I just want to disclaim, like, while I've done well with this company, I probably, I might not be able to find another one like this. But I think the best use of my time, and I think, I'm just trying to be humble and like understand the actual situation. Uh, that's why I've, gone into what I think is lower risk, longer duration, better return opportunities, just becoming the intelligent fanatic myself, in terms of operating my own business. Because I think there's so many investors and there's so many smart people, and it's like, well, it's just a pretty competitive, you might find your niche in microcaps, whatever, and you could do well, and you might have your own style, and, but I just, I'm looking for those 1 foot bars to step over, and like literally here, like my area and like what I'm doing, it's kind of like child's play. And I say that, but I'm still always trying to, improve, just as in case, somebody comes in and, tries to destroy. But I think I'm setting myself up for, uh, the best results for me. And it's just something, other people could potentially do. They might be an investor, or they might be that operator might be a better investor, or that investor might be even a better operator, or maybe just based on the certain circumstances around them. So I hope that other people just see that there are so many opportunities that might even be a better cost opportunity for you, than where you might be playing. And it could be a sub division of investments, or it can just be, just in a totally different field.
All right. So coming back a bit to the characteristics of these intelligent fanatics, I was a bit curious, like reading, like Kelleher's mother, for example, taught him the respect for everyone, and there's other examples as well with Hank Rowan, and like how are you thinking, like the EQ versus the IQ, how important role that is? That would be interesting.
That's a very good question. It's definitely less IQ, more EQ in terms of understanding yourself. And one thing that I think is important to talk about is style. And so when I say style, I think anybody who wants to get great results in whatever they do, they have their own style. And so when I say style, like Warren Buffett, like he's got his own style. He's straight shooter, great communicator, simple. He has his own way of operating, And I think a lot of people want to imitate and copy that, which is good. And you get to learn a lot of important topics by doing that. But with any artist, they learn from the best, they imitate, and then they get to a point where they find themselves and they find that internal voice and they meld all these different influences. And I think of it like a big pot of gumbo, where you throw in all these great influences as ingredients, and then you get to a point where you just start stirring it together, and then you take a scoop out of it, and you get a really unique version of all of those influences, which is yourself or your own style. And that really separates the greats from the non-greats. So in terms of, what are some of the intelligent fanatic characteristics? Well, I just think that there are so many different types. I think as long as you look at greatness, whether it be, just business operators or investors or musicians or artists, there's so much to learn from everybody. So I wouldn't look at Henry Ford and say, okay, well, I'm going to emulate him in totality because he was, against Jews. No, that's not a good. So everybody has their own flaws, but I think you just take all the good pieces. So, like with Herb Kelleher, him talking to his mom and like really teaching him how to respect people and be a good person, and how Southwest, their way of treating employees, treating customers, and how the company treats employees. It's kind of a transitive algebra equation where you treat one and then one will treat the other, because so A is B and B is C, so A equals C. So if we can take that from them, and then with John H. Patterson from National Cash Register, he wasn't the nicest guy ever. Tom Watson, who became the founder of IBM, was a worker of NCR, and there was one point when John Patterson got so mad at him that he, had his desk outside, and it's just like Steve Jobs, parking his Mercedes AMG or whatever in one of the handicap spots. That's like, there's so many, bad parts of all these individuals, and there's so many different good parts, and it's really hard to just simplify all of these traits and characteristics down to an absolute. And I think that, again, going back to Mosaic, there are so many good details and how some people might operate, and they operate with their own style that's unique to them and can work for them. But what works for somebody else usually doesn't work for you, especially if you're not being true to yourself. And so I think that with me, I've always tried to take the positive, good quality attributes that I find interesting, and then I tried to take all of the ones, mix them up, and then create my own type of unique operating or investing kind of philosophy, and then be able to utilize that in real life. And I think that's the style component of it. And so I know everybody wants to hear, what's the great thing, what are some of the characteristics. I can give you a couple because I know everybody wants to hear them. But it's just a great leader who shows all of the characteristics of a great leader, that being, high integrity, going above and beyond the call of duty for their people, creating that culture. So that's very important. And then it's the underlying culture that's getting all of the team members to work together. It could be as simple as that, but I think there are so many different ways to achieve that. So much gray area. And I think that's where somebody can see and, pick the different great qualities of others and then meld them into their own style, and then be able to create something new and unique that works for them. So I think it's, just literally as simple as that. And it's been extremely helpful for me in terms of music, in terms of investing, in terms of operating a business. And I think that's one of the ways that the greats, that's how they did it. And if you really want to become great at whatever field, I think it's the most efficient way possible. So emulate a lot of the great masters, take all the good from them, mix them up, find out your own unique stuff, and then just give it to people. Provide the value that you can where you can. And I think people will just start knocking down their door just to find you. And I've seen that with my business. It's just go above and beyond, provide great value at a good cost, and people will just look for you. And it's great results, attract people, and they just want to be partnered with the people who treat them the best.
It's really interesting. I had a question regarding, I mean, as investors, many investors are quite, I mean, general in their approach. They don't focus on a specific industry or sector, but they go broad. What's your view on, I mean, investors going into really specific niches? I'm thinking about the fanatics. They often have an intense focus on a specific
Yeah,
industry, of course.
any great business usually starts really teeny tiny, very narrow, and then over time they expand. Yeah, I think any great individual, they have their niche, and they have, like I said, they have their style, they have the place where they operate, and they're the best at it. And over time, especially with the businesses, it's that business's ability to start great, start small, and then be able to kind of clone itself in other similar areas, and just be able to keep up with that scaling. I think that's the best way to look at it.
All right. And also coming back a bit to the culture, as we're talking about, there in the books there are several examples of how important the communication is.
Yep.
But now during the last year, it's really been challenging for many companies. People working from home, and you had some example where they were so early in the startup phase that they couldn't even have anything separating the desks. Everyone sat together on bet. But like, how do you think that the COVID situation has impacted, and what's the long-term view of this in terms of culture when people are not working together?
I don't know if I have too much of an opinion on it, but I think human beings are social. I think that human beings, the good ones, are not good as in good, but the ones who can achieve some interesting results, they're able to take advantage of challenging situations. And I think that I don't think that will really affect a lot of the great businesses.
You
I think
haven't seen any
they'll,
examples
yeah,
or so?
they'll just adapt. They'll adapt better than anybody else.
Yeah, probably. And they also have, most of them are decentralized so
Right.
they're quite spread out already and might be even managing it better than other companies. Yeah.
Yeah. I would say I would definitely agree with that statement. Yeah, they're the better companies, the ones that are more decentralized, so they're going to be more localized. So it's going to be a bit easier to navigate a situation where people aren't able to, be in close contact in a more centralized fashion.
Yeah, that's true. So when looking for these companies, these intelligent fanatics out there, like, technology is playing a bigger role in everything we do. There's robots on the stock market, and there's even like emotional AI and such things now. Do you ever think that the technology can like try to identify these kind of characteristics and have some kind of competitive advantage there?
That's a wonderful question. I think the human mind hasn't even been tapped to its fullest potential. I think that uh, the AI stuff is useful in many different ways. I don't think that the AI can overcome the human mind in the next couple, the short term, medium term. I think people will start to realize that we've been shortchanging ourselves in terms of how what potential we can attain with what we're already given. And so I think my personal view is that we'll actually start to utilize the AI to help us understand how to use our own potential instead of overcome. Then again, there will probably be companies that'll come around that will try to be that crutch, and we're using internet more as a crutch these days. But I think the people who will excel, I should say, who knows what's going to happen to the world as a whole, or what technology might have a hold on those people. But I think the people who do exceptionally well in terms of whatever field they're in, they're going to be able to adapt to whatever situation. So if AI is doing pretty well, I think the people who really excel are going to be able to just turn their own potential up in terms of their brain power and what they're able to do. And I think it's because I think the human mind, the subconscious, that supercomputer that we all have, but we don't really tap into much, and we might see a glimpse of what it can actually create, with these aha moments. I think that we really could come a long way in utilizing it, and it's just a phenomenal thing that the greats tend to utilize the best. So for instance, I'm talking about people, if you're talking about Einstein or Buffett or any of these people, they're generally having more aha moments than everybody else, or the people who create some pretty stunning things. They're able to tune in to what matters most in their brain than the most people can, and they can adapt.
Yeah. Do you think that like the ones that we know today are like people recognize as intelligent fanatics, even if they might not think in those terms? Do you think they are still underestimated by the public? Because you talk about microcaps being, people don't see them and you can find them early, but the big ones where people kind of, Jeff Bezos or those, like, do you think they are still underestimated?
I think it's once people see the results, once you see Jeff Bezos now, everybody knows that he's capable of a lot, because just see what he's done. I think it's a lot of the people who are the dark horses that are younger, that haven't put up those great numbers yet. They're the ones that are nobody knows about, because they haven't been on a commercial or Forbes $1 billion list, whatever. They haven't had the time to demonstrate, so nobody will believe them. And I think that's the interesting phenomena. If you're an investor or you're somebody who's trying to be a great master at whatever field you're in, there's going to be 10, 15 years where nobody knows who you are. Absolutely nobody. And you could scream from the rooftops, great insights and all that kind of stuff, and nobody really listens because there's good kind of bias for people. It's like we're trying to filter out a lot of noise. But I think the people who really understand how to become great and the time and necessary effort to do that, something phenomenal, they generally, attract each other, and they're around people who create some interesting results, because again, they're just looking for somebody who's similar to them. So I think the people who really put in the time, effort, and really understand things, the future masters, they'll generally attract towards each other, and they'll look for themselves in somebody who's their peer, who hasn't done anything really phenomenal quite yet, and then they either are able to in isolation, separately, be able to create something great, or they generally share information with each other, and they create something in tandem that can be quite great, because they're just sharing great insights with each other, learning from each other. And it's usually the people who are humble, that learn as much as they can from everything, like from nature even, because that's probably one of the best teachers out there. They're able to just dance around everybody else who's just kind of riding by the seat of the pants. So that's how I think there's a funny little anecdote that I'll share. So there's a great jazz trumpetist, Miles Davis, and he's, oh gosh, like one of the top. He has like the top selling jazz album. You say Miles Davis to anybody and who likes jazz, and of course they know who he is. Funny thing, he said, and he played with like the absolute best, Charlie Parker, John Coltrane. He was with every one of the great musicians when he started, and then over time he developed into his own style, and he helped mentor a lot of the greatest next generation jazz musicians. And he said it doesn't matter how much he played and how much respect he had within his niche, which is jazz music. He said it's once he was on a commercial for, I think, a Honda commercial, like in the late 80s, after he's created some of the best music and extremely successful for a jazz musician. He said it's like 30 seconds of that, and he would walk down the street and everybody knew who he was. And he said that what kind of, weird situation is that? He's become like the best jazz musician over decades. Practically nobody knows about him. And then he, is literally on a commercial for a few seconds, and then everybody knows who he is. So it's just an interesting thing to think about in terms of somebody who's actually at the top of their field and who has had many decades of experience and showing results. And then it's just literally, a happenstance, couple seconds with tons of distribution, that being, TV sets. And then literally everybody knows you. So I think that's in terms of who's now considered somebody great based on where they've been talked about on media and whatever results they've been able to generate. And then the younger next generation, it's going to be a lot harder. It's like you have to know people, you have to embody all the things that you think is going to be the next great thing, and then just take it from there.
So, Sean, this has been a fascinating conversation. Thank you so much. This being a book podcast, we of course want to know if you have any book recommendations.
Oh wow! So I have some music books, and this should be good for a lot of individuals, because I think purist trying to become more pure is a recipe for disaster. So I have a little metaphor, goes like this. So if you think like gold, pure gold, it's wonderful, it's valuable, but it's not durable one bit, right? It's very malleable and it doesn't last. So that's, there's a reason why jewelry isn't made out of pure gold. It's usually made out of, a combination between gold, copper, and whatever else. So that's a couple. So if you get a couple elements mixed together, it's a little bit more durable. But if you get like a high entropy alloy, which is a mix between like 5 or more elements, those are some of the strongest, most durable, most ductile, the best in terms of efficiency and weight and all that kind of stuff. So I think a lot of people, if they can meld a lot of different ideas, fields, and interests into one, you're going to be so much better off. And so I have music book recommendations, ones that have been very helpful for me, not only in understanding myself in music, but also within business and investing. There's Herbie Hancock. He has a book, autobiography that he wrote. Can't remember the name of it off the top of my head, but that has been very influential for me. And then there's one last book. It's called, what is it? Victor Wooten, who's one of the top bass players. It's called The Music Lesson. And it's a weird kind of book, the way it's told. It's told from the perspective of like a young musician trying to find his way. And then he comes into contact with this master, and he has to piece together all of the things that make like a great musician. I think it's the same exact thing in terms of becoming great at any field. And I think it's just a very insightful read. So I think that's another great one. And I have a bunch of other ones that have been helpful for me, but that's all the time I have today.
Perfect. Thank you so much, and thank you for letting us stand a bit on your shoulders.
And I'm really thankful and appreciative. I'm first guest on your podcast. Thank you.
Thank you, Sean.
Take care. Thank you for listening to Investing by the Books, a podcast by Redeye. You can follow us on Twitter at ib_redeye and email us at ib.podcast@redeye.se. To improve the podcast, we really appreciate your feedback, so please rate and review us. Notice that the content in this podcast is not and shall not be construed as investment advice. This information is meant to be informative and for general purposes only. For full disclaimer, visit redeye.se. For the editing of this podcast, we thank Jon Hintze, and for the graphic design, Jesper Viking. I'm your host, Eddie Palmgren, and until next time, I sincerely wish you the best of luck on your journey through life and investing.